Hello, Dr. L here. I just wanted to show you a few charts. It's the end of the day, October 27th. My last video talked about the crash of 1987. Told you to be alert for such possibility this year, but use tracking exponential moving averages. Well, those averages have kept moving up. We did get a little blip down on the anniversary of the crash of '87, but it was quickly reversed during the day. On longer take, this is the S&P E-mini from the 1st of March up through present. And near the anniversary 421 date, the market been sagging, starting up, took a sharp little dip here, and then continued up with rising exponential moving averages. Now, just before the solar eclipse on August 21st, the market started a little dive after President Trump threatened North Korea with a nuclear attack. That caused some gyrations into the solar eclipse. Exactly on the solar eclipse date, the market bounced back up. It bounced off of the 144-day exponential moving averages, pulled back into the 29th of August, and then started to climb again. Now, as it's been climbing, there's been a lot of discussion of loss of volatility. And I'll show a little bit more detail on this rally since the eclipse. But what I wanted to point out here is that there has been a steepening of the trend lines. For about 5-month period here, the trend line was very shallow compared to what it has been since the solar eclipse. So that solar eclipse did add a lot of energy. It's obvious because millions of people drove all over America to get underneath it to see it. Now let's take a little closer look at this steeper trend line. This is the my plasma chart using intraday data. Solar eclipse bottom was right here. Then we got a pop up, and then a few days of just consternation and a sharp drop down here, and then what was a pretty identifiable fractal of a 1, 2, 3, 4, 5, and then in 6 something funny happened. Instead of a normal pullback, we got a strange pattern that is best described by some of the old-timers as a rising correction, if you will. And it was really frustrating to day traders because they're very narrow intraday ranges. So intraday volatility was very low. Then on the morning of October 19th, the market did a sharp drop, but bounced off of this exponential moving average. This is actually a 12-day exponential moving average. So we got a little dip and a rally back up and closed the week on the high. But then this week, on Monday morning, instead of this rallying continuing, we got a sharp sell-off end of the day on Monday, mostly NASDAQ stocks. Then not much going on Tuesday, and then Wednesday starting down, and then all of a sudden a very sharp drop, breaking this moving average. Actually went down almost to the 24-day. But here we had the bears dropping it, Bulls fighting back. Bears with a 1-2 punch, dropping it to a marginally lower low. Well, the bulls fired back with a rally intraday on Wednesday. Then on Thursday, we had another one of those strange days where the Dow was up like 180 points and the S&P is only up like 4.5, a ratio of 37-1. Normal ratio is about 8-1 in daily ranges. So we've been seeing this story of indications of a top and some really ugly statistics. But then today, the market turned up. If you just look at this little dip here in exponential moving averages, that is a buy. Now, in terms of looking at fractals, there's no rule that says a fractal cannot be followed by another fractal. And just like an Elliott wave, you might get an X between them. But today, on news of good earnings, the market went up and made a new high. So it does look to me like the bull market is alive and well. And what's interesting here is that we had much higher intraday volatility during this strange little pattern. A great relief from this period of low intraday volatility. So that's just a quick update. I expect this market to keep moving up as long as there are profits. There are longer term cycles that people have been tracking that said the market should turn down in August. But solar eclipses are very good at inverting such cycles. So that may have happened to any longer cycles. This is a rising trend line upper under what should be a rally up into next week, up into the end of the month on Halloween. So just a quick update from Chaos Manor. If you want to learn more about my work, you can go to moneytide.com and look at my work. And for day traders, you can get a subscription to my day trading hotline for daytradingforecast.com. Thank you. Have a good week.